good news strikes the economy. Against expectations of 4.5% CPI number for the month of September, we have a number of 4.3. So actually looks like it is undershooting. It was always expected to be a good number compared to 5.05 in the month of August. September was always expected to come in a good 50-60 basis points lower. We have now got a number which is 80 basis points lower. So quite clearly there is a greater disinflation than what the market had anticipated. We will just try and get you the details. Okay, what do we have here? Food inflation. September food inflation has come in at, oh, is this 3.88? So it was 4.3 in the month of, 4.3 is the general inflation, 3.88 is the food inflation, compares to 5.9 in the month ago, that is August. So that's again a substantial fall that we have seen in food inflation as well. I'll just get to all the other numbers in a minute before I toss it over to our expert. Soumya Kanti Ghosh of SBI is with us, and in a bit other experts are going to be joining us. Let me quickly read out all the numbers to you. Overall inflation is down to 4.3. Food inflation is down to 3.88. Services inflation, which we call miscellaneous, is down to 4.5%, 4.5%. That also is a fairly significant achievement, but we will come to the details in a minute. Let me read out every single item. Cereals, 4.17. Meat and fish are down to 5.8. Eggs at 9.9, but eggs have been expensive. Milk and milk products, 4.27, again a benign number. Oils and fats, 4.6. Fruit inflation has risen a bit to 6%. Vegetables are absolutely crashed, minus 7.2. Pulses have come down to 14%. Pulses last month as well were at 27%. So it's a huge fall that we have seen in pulses inflation to 14%, something which Soumya Kanti himself had forecast because of the good harvest that is expected. Sugar has risen as it has been, 25.7% in sugar. And let's get to food and beverages. Overall is 4.12. Then clothing is 5.24, footwear 4.05%. Let's get to fuel and light, that is 3%. Now within services, household goods is 4.3%, health is 4.67%, transport and communication 2.7%, recreation and amusement 3.97%, and education is the only one which is close to 5%, 4.93. But overall, you're definitely going to get a core inflation which apparently will be lower. Soumya Kanti Ghosh, let me first come to you. 4.3 itself, does it undershoot your expectation? And what is your non-food, non-fuel or your core inflation number?
Yeah, I think at 4.31%, it is actually undershooting our inflation projections. We were at around 4.51%. So clear 20 basis point downside to the inflation which we had given out. But the only, I'll not say a sore thing, but the only thing is that the core CPI has actually moved up. So it is at 4.88%. But if you read out the numbers and if you have given the numbers which are closely looking into, I think the numbers is purely because of that personal care and FX.
Care is 7.67.
Yes, so that has also moderated from 8.3% last time, but I think there is a little bit of impact of the gold over there. So that is the reason why the core has moved up. Otherwise, I think at 4.3%, we cannot get a better number than this. And the most important thing is that now definitely I can tell you that you will get an October number which will be sub 4%, because in October we are printing at 4.5 or 0.5 or 4.1%. So with this 4.3%, I don't see any reason why the October number would be below 4. So now we will have a series of benign inflation numbers beginning from October itself. So therefore,
we'll get the below 4 number, Soumya,
in October
for October,
itself.
November and December, you think?
Yeah, and also January. I think now the trend is actually for the next initially we were for November and December. Now with this number in October, sub 4% looks a distinct possibility, and maybe for 3 to 4 months we will get a sub 4% number if everything goes all right. So in my sense, the year's average, as we just calculated, could be closer to 4.5% now,
Okay.
which will clearly undershoot the RBI projections of around 5% in March 2017.
Fair enough. Let me get Indranil Pan as well into the conversation, Shaumya, and I'm coming back to you for more, with more questions. Indranil, I've read out all the numbers to you. I could read them again, but is it undershooting your trajectory? What will now be your March inflation forecast?
Well, our number for this month was 4.4%. So at 4.3%, I shouldn't say it is significantly undershot or anything like that. It's more or less in trajectory because we had already factored in the lower vegetables and the lower pulses prices, which has actually been the key mover in the whole inflation basket. Now, having said that, I think till about November/December, we expect inflation to hug the 4% levels. It can be plus 10 to 15 basis points, sort of higher or lower. But the central tendency appears to be 4% for the next few months. But having said that, I think end March we move back to around a 4.5–4.7% number because of the base effect reversal.
Okay. So what did you say is your March in inflation, therefore?
March inflation should be close to 4.5 to 4.6%.
Okay. Now, in that case, Indranil, space opens up for cuts, for more cuts, because the Reserve Bank had said it is a 5% inflation with an upward risk. Now, do you think in December itself the upward risk goes, or will they actually guide even lower?
I think the way I would sort of read the MPC and the whole monetary policy actions in the current new atmosphere is more a forecasting model in terms of the inflation. Now, having said that, given the fact that 50% is a core inflation sort of a structure under the CPI, I don't think there is any significant chance for inflation shooting below the 4% on a very sustained basis. So the overall trend line projection for inflation is around 4–4.5% for the near future, unless there are significant improvements in terms of the supply on the core side of the picture. Now, before 4th of October, we were anyways expecting a 25 to 50 basis points incremental room opening up. Given this trajectory, 25 is already done. So I think the maximum that we can get from the RBI is another 25, possibly in the December, and that should be the end of the current cycle, unless we are ourselves extremely wrong in terms of the inflation projection at this point.
Okay. Shaumya, your thoughts? For December, RBI will have another number, right? On November 15th, they will get the October number as well. So how would they be placed in December? What are you expecting?
See, as we just said, if the October number is somehow close to the 4% or even a tad below 4%, I think that definitely opens up a scope for monetary accommodation in December policy. Now, the important thing is that I think inflation, I mean, with every number, I mean, being undershooting the RBI projections. Last month also the number had undershoot, this month also undershoot. And now at this rate, if we just do a simulation exercise, you will see that the year-end inflation average could actually now be closer to 4.5%, with a March number, which I just said, could be sub 4.5%. So if this is the case, I think that with a 25 basis point rate cut, which is definitely all in December, I am not ruling out further rate cuts, even though that looks a little bit odd at this point of time. But with a 3 to 4 months of inflation number, which could be close to 4%, I don't see any reason why there could be more space for further monetary accommodation. But as of now, we are sticking to a 25 basis point incremental rate cut in December.
Okay, but Shaumya, would you worry that the core inflation still has actually inched up? So like Indranil, are you saying that further disinflation becomes a bit of a problem, below 4.5?
No, see, I'll tell you one important observation over here. The core inflation inching up, we are not significantly bothered, because if you look into the long-term core inflation average for the last 18 or 20 months, it is trending at 4.5%. And in fact, all the numbers, if you look into the education, if you look into the health, all of them numbers actually have been trending low. For example, as per the education is now below sub 5%. So my sense is that then core inflation average of closer to 4.5% gives you a lot of comfort, and even though there could be some increase in the core inflation of maybe around 10 to 15 basis points, I don't see too much into it, because you will see that some more months, I mean, even though the food prices has been significantly grading over the last 12 months or so, sometimes it's going up, going down, but the core inflation is even relatively steady. So that, I think, is the most important thing in the CPI data. And the other thing which I would like to watch out on October 18th is what is the forecast which the Monetary Policy Committee members are now giving out. Because if there is a wide variation, then that could make the task a little bit difficult in terms of interest rate decision. But if all of them are on the same page in terms of a fan chart, it could make the job more easier in terms of a consensus.
Well, actually, after the complete lack of communication in the monetary policy itself, I am not raising my hopes very much on the minutes of the Monetary Policy Committee. Let it come. Let us hope that all this will be revealed and more arguments on why the neutral rate was lowered. But I have my colleague, my commodities editor, Manisha Gupta, joining in, who probably will give you some insights into why the neutral rate could be falling. She has more insights on the way pulses inflation has fallen rather sharply. Manisha.
Well, absolutely, Lata. Yes, we saw all-time highs in the previous year and this year as well, constantly in the pulses space. But the kind of numbers that have come out in sense of the Kharif crop really have been quite promising. If you look at the pulses prices, after an all-time high, we are off 45% from those kind of levels. And that's the reason you have seen this decline come in. Also, you know, it has been the first advanced numbers from the government as well, which show that we are looking at a new record when it comes to the Kharif crops as well at 135 million tons. And that really has been quite promising and supportive as well. Rice, cereal, pulses, coarse cereals, all of that crop is at record highs. The numbers are much higher than what you saw at 5-year average as well, and that really seems to be supportive. And not just pulses prices that have come off, but if you look at the rice prices, they have been on the marginal on the lower side as well. The cereal, wheat prices also have been constantly declining, moderating. And also if you look at the edible oil space, that also has seen price decline actually YTD when you look at 2016. So most of the food prices seem quite in control, and the vegetable inflation as well, which we saw higher in the previous quarter, seems to be on the in control as well.
Oh, absolutely. I mean, vegetables, there's a contraction year on year.
Minus 7%.
But, as you say, you know, pulses, and Xiaomyo was pointing this out for quite some weeks now, months, if I'm not mistaken, that pulses can see a fairly rapid tumble, and that's what's happened. Actually, Xiaomyo, month on month, the fall has been 2.4% in pulses, month on month. And this is a contraction in prices. We're talking about fall in prices, not a slower rise, as is the case year on year. Okay, Xiaomyo, considering this, what Manisha is telling us about food inflation, how are you looking at a 1 year ahead target? Do you think for calendar 2017 we could see a sub 5% inflation? Or do you think the math will go awfully wrong because of... okay, just hold on to that thought. We have Vivek Rajpal also with us. Okay, I think we'll take a minute to reach Vivek. Vivek Rajpal is with us. Okay, Vivek, 4.3% is the inflation number, and our two economists, Xiaomyo and Indranil, have been saying that by March 31 we should have a 4.5% inflation, so much lower than what the Reserve Bank forecast at 5% with an upward bias. Where do the bonds go from here?
Right. So I think what this inflation reading gives is that it increases the chances of a December cut, because RBI talked about upside risk to inflation. Still, I mean, despite them cutting rates in the last meeting. And if the clarity comes that there's no upside risk, and as you are saying, if something like 4.5 number comes into picture, then the probability of December cut is very high. And I think market will now start trading based on that assumption.
Yes.
And if you take a terminal rate at 6%, I believe given the liquidity conditions, given open market operations, something like 650 to 660 zone for 10-year bond is very likely.
Okay, so tomorrow, I mean, when are you expecting this 650 figure? What are you expecting tomorrow itself?
I think that will happen. That will happen closer to the policy.
Okay.
We still have one more reading to go.
One more reading.
That still means a decent rally, right, over
Yes.
over next few weeks.
Yeah.
But that visibility will definitely come into the market.
The 6.97 bond is had closed at 6.73 today.
Right.
With this reading, and both our economists are pricing in one more rate cut. And
Right.
obviously, if the space opens up, that would come in December and not in February, when the budget also will be on the RBI's mind. So, assuming all the economists think like the two guests we have, what will be the 10-year bond yield tomorrow? Both 7.59 and 6.97.
I think tomorrow we should see probably 3 to 4 basis point or 5 basis point of a move down in yield. That is highly likely.
Okay. All right. And when do you expect this 6.5 closer to December or
Yes.
after the November reading comes in?
Yes, I think we should see 6.5, 660, probably closer to the next policy meeting.
Okay. What is your view of the 10-year bond 6 months down the line, say March, or probably 12 months down the line?
Right. See, Lata, there are two aspects to it. I think we are here in a lower for longer kind of yields will be lower for longer. But whether we make a sustainably new low in yields is something that we have to see. My assumption is that 6% is probably the terminal rate. Because next year we have GST, 7th pay commission impact, etc. on inflation. With 6% as a terminal rate, I think 650 or 656, around 650, 660 levels, we should stabilize.
Okay.
I would not expect a sustained rise in yields because we are not talking about any hikes anytime soon.
Fair enough.
So that will be the levels where we should stabilize for a prolonged period of time. And it will still be a very good carry product to hold on to.
Fair point. Vivek Rajpal, thank you very much for joining us. Indranil Pan, would you agree? You also are penciling only one cut more.
Yeah, I'm penciling in a one cut more in terms of the RBI. But having said that, I think globally yield curves are getting steeper. Most of the central bank actions are pointing out to a preference towards a steeper yield curve, and the 25 basis points cut by the Reserve Bank of India may not translate into fully reflecting on the 10-year, which necessarily means we are pretty much close to the bottom in terms of the yield movement, is my belief. The other thing that also needs to be factored in and highlighted is the US Fed, the trajectory that the US Fed sort of points out from there on, and also very importantly the US elections. And if Trump becomes the next president of the US, you can actually expect huge amount of volatility in the financial market. So that's something that needs to be watched out for.
Okay, I think we'll have to be groping for reasons for a Trump victory now, Mr. Pan. Saumya, what is your sense now? Do you just think of one cut, or will 2017 hold more cuts?
See, I'll just play a devil's advocate over here. I mean, this was one of the observations which has been made in RBI. If you very closely look into the RBI annual report last year, there is a clear sentence over here which states that the neutral rate of India under time varying condition could vary from 0.6% to 3.1%. So the RBI has actually put it on paper, saying that the neutral rate could be as low as 0.6% in recessionary condition, and in a boom condition it could be as high as 3.1%. So if
that low?
The case, I think, yes, that low. It's written in the paper in the RBI annual report which came out last year.
Yes.
So if that is the range of 0.6%, and given the economy is still to get out of this business cycle, which in a downcast mode, I am sure that 25 basis point rate cut will be coming, but I am not sure about the RBI interpretation of the real interest rate, which may happen in the forthcoming policy, because there is a clear statement in the RBI annual report which talks about a real rate which is as wide as this 0.6 to 3.1%.
Okay, well, actually, the US itself is looking at, a 2.9% as the terminal rate, and, there the neutral rate is at best seen as 1%. Nobody is arguing for a neutral rate below that. 0.6 looks a bit challenging in the current global context. But anyway, that's an academic debate which we can have after we read the minutes of the MPC on 18th. But for the moment, a little more on the trajectory of food inflation from our commodities editor, Manisha.
Thank you, Lata. I just want to make one more point here, and this is just spreading the good news slightly further here, because, you know, this has been the best monsoon in last 3 years, and while we already are looking at a very strong Kharif crop here, the good point is that the water reservoirs are full, and we are looking at a spillover of monsoon in October as well, and that perhaps tells you that the Rabi crop expectations also have been built on the higher side. So it's not just one-off that you have seen the inflation decline when it comes to food. The market does believe that you might see lower food prices for slightly longer time, because the global production is also on the higher side, and we are looking at a positive Rabi here as well.
Okay, yes, that's certainly most important. That's the volatile element in our food inflation. I'll toss that to our guests in just a minute. We're being joined by Ambarish Baliga, the stock market expert. Ambarish, we have a better than expected inflation number. Our poll had thrown up 4.53%. We have got a number of 4.3%, which, as our team is pointing out, is the slowest in 13 months. Important point,
Absolutely.
it is below expectation, and therefore opens up, as our experts have said, the scope for another rate cut in December, which perhaps was always there, and now becomes more clear. How may the markets react tomorrow? The bond yields are expected to go perhaps 3, 4, 5 basis points lower tomorrow. How will markets react, you think?
I think this clearly is a positive data point, and especially after the sort of a thrashing which we got in the markets today. I think because of this, I mean, like I would say that this is one of those silver linings in the clouds today, and hopefully because of this, we could see the markets possibly opening slightly better tomorrow. But then finally, it's going to be global cues, because that's what has been, been the focus in the market all through. So I think initially we should open better, but then after that it's going to be the global cues.
Oh, sure, but since we are on that issue of how the markets open tomorrow, the TCS numbers, actually margins have beaten expectations. It's only revenue that has disappointed.
Right.
Given what you saw of the results and the inflation number, put all the cues together, do you think we may have bottomed today, at least for the very near term?
I think so. I mean, when we say very near term, in fact, I would say a couple of hours in the morning tomorrow.
Okay.
Yeah, and like the other good thing today was that we still maintained that nifty support of 85.50. Technically, that's a very good support level, and we have maintained that.
Okay.
And that we have maintained a couple of times, just not one. So that is the other positive takeaway. But then it's only a matter of time, because in case there is any adverse news flows from the global front, and in case we break 85.50 decisively, it won't take too long for the markets to reach 8200 levels. I mean, it could be a couple of days.
Yeah.
So I think the next 2 or 3 days should be watched, whether we hold on to these levels or not.
Okay.
If we hold on and bounce back, I think that's extremely positive.
Oh, yes, of course. There is a lot of slip between the cup and the lip. Tomorrow morning, we will also have probably Infosys numbers before the markets come. So perhaps we shouldn't count our chicken before the hatch. Thank you very much, Ambarish Baliga, for joining us. Actually, out of time on the show as well. Xiaomyo and Indranil Pan, thank you very much for joining me in this discussion. So the near unanimous view from our experts has been that the inflation number is lower than expected. For some, it is more lower, but uniformly lower than expectation. And therefore, in the December policy meeting, chances are the Reserve Bank will revise its March 31st forecast, which currently stands at 5% with an upward bias. Probably the upward, definitely the upward bias may go. Maybe even a lower number will be forecast, and therefore that will open space for further rate cuts. One expects the bond markets to chime in response, and probably bond prices will rise by a rupee or so tomorrow morning itself. Could have a benign impact on the stock markets, provided, of course, the earnings also oblige. That's it on this edition of the inflation number. It's back to the studios, where we will be having more news and updates coming your way.